And welcome back, everyone. While we're waiting for people to log on, let me welcome Pascale Lamb, advisor from the ICII in Germany. Thank you, Pascale, for facilitating that session. Also, we had a last-minute speaker change, which is not reflected on this slide here. So welcome Nilofer from Pakistan. Thank you very much for stepping in on a very short notice. And that is another session which impresses me already by the time zones and regions that we cover, all the way from our perspective to the west, from Costa Rica to the east to Pakistan. It's quite impressive. Now, the topic today is another very important one. We were discussing how insurance can look in a post-pandemic world, supervisory and policy perspectives. Before we do that, very quickly, I'll run you through the housekeeping. Please mute yourself so that we can only the person that is speaking. In this session, we have Spanish translations. So you click on the globe button and you can select your language. The session again is being recorded and we will make them available on the conference website. We'll start to do that next week after the conference. Also, we put presentations there if we are allowed to publish them. Now, please, if you have a question, please put them in the Q&A function. I should probably say, please put them in the chat function because usually it's the opposite. Please put them in the Q&A function and don't put them in the chat function because in the chat function, it's more difficult for the speakers to reply and to see that. If you have a comment only, then the chat function is the perfect place to comment, and make sure that you send that chat to all participants and not only to the panelists if you want everyone to read your comment. If you have any technical issues, please message the MIN executive team in the chat. And I don't want to take more of your precious time, and I hand the mic to Pascale. Thank you.
Thank you, Dirk. And thank you to the Microinsurance Network and the Munich Re Foundation for organising this conference and for all the work also that has gone into hosting this session today. This session is being hosted by the Access to Insurance Initiative in the capacity of our joint work with the International Association of Insurance Supervisors, the IIS's Financial Inclusion Forum. This forum at the IIS shares supervisory knowledge and expertise on financial inclusion. Perhaps unsurprisingly, the pandemic has been an important topic within this forum, especially as insurance has been heavily impacted and played a multifaceted role during the crisis. While we've all been impacted, it's fair to say that it's the most vulnerable and those on the lowest income who have been hit the hardest, both from a health and economic perspective. The full impact of this crisis is still unfolding, but there are some lessons and policy priorities emerging to build resilience and greater financial inclusion, as well as to ensure that insurance is more inclusive in the post-pandemic world. Our speakers today are representatives from policymakers and the insurance sector who will draw out some of those lessons and policy priorities. On the insurance supervisory side, we have Tomás Soler, Superintendente at the Superintendencia General de Seguros de Costa Rica, and the chair also of the Financial Inclusion Forum. We are also fortunate to be joined by Dr. Manuela Zweimiller, Head of Implementation at the IIS. And from the insurance industry side, as Dirk mentioned, we have a slight change to the programme as we have Nilofer Sahal, Head of Channel Strategy and Execution from EFU Life, Pakistan. And finally, from the policy side, we have Miles Larby, Head of Financial Consumer Protection at the OECD. Over the next 90 minutes, we'll have 3 segments to this session. The first segment will be a presentation by the OECD on protecting financial consumers and supporting financial inclusion in the context of COVID-19. We'll then move to the panel discussion with the remainder of our speakers, and we'll conclude today with a Q&A session. We want this session to be as interactive as possible, so please already start thinking about your questions and type them, as Dirk said, in the Q&A box. I will now invite Miles to start his presentation. Miles, over to you.
Thank you very much, Pascale, and good morning, good afternoon, everybody. It's my pleasure to join today's conference, and my thanks to the Microinsurance Network, the ICII, and the IIS for this invitation to participate and share some important work with you relating to the impact of the pandemic on financial consumer protection with a focus on insurance. Just a word at the beginning. I'm going to outline for you some work, some research, data collection, data analysis work that the OECD has done, and a report that we'll soon be publishing on this topic. The OECD's role in this area, the OECD leads international policy development on financial consumer protection on behalf of the OECD and the G20 via a network that we support called the G20 OECD Task Force on Financial Consumer Protection. This task force, which comprises members of all OECD countries, all G20 countries, FSB jurisdictions, and international organizations, including the IIS, is responsible for maintaining, monitoring, researching issues, challenges, risks relating to financial consumers, and where appropriate, developing consumer protection policy responses. What we also do is we support the G20's Global Partnership on Financial Inclusion, bringing to the table financial consumer protection aspects and policy input. And so the piece of work that I'm going to talk about today was actually a piece of work that was conducted by the task force, but also in support of the G20 GPFI, the Global Partnership on Financial Inclusion as well. So that's just a little bit of the context. If we can go to the next slide, please. So this slide just gives you the outline of the report that I'm going to sort of walk through today. I'll walk through some of the key points. As I said, this is a report that we produced over the course of this year on behalf of the OECD and also in support of the G20 Italian presidency for the Global Partnership on Financial Inclusion. And as you can see from the slide, the report was focused on exploring lessons that have been learned and effective approaches that countries have put in place to protect and support financial consumers in the context of the COVID-19 pandemic. So, as of course you'd all be aware, considering the conditions and the responses of governments around the world to the pandemic, lockdowns, social distancing measures, and so on, our role was to look at what was the impact of that on financial consumers and their personal finances, and then to monitor and share information about what were governments, regulators, and supervisors doing, what measures were being implemented to provide additional support and protection for consumers as they were dealing with the impact on their finances arising from the COVID-19 pandemic. So if we can go to the next slide, please. So this slide, I think, is just important in terms of understanding the policy context in which we operate. So I said at the OECD, we lead work relating to policy development on financial consumer protection. We see this, though, as very much a sort of a part of a complementary set of policy agendas that ultimately are all designed to support and improve the financial resilience and well-being of consumers right around the world. And so these interrelated policy agendas are financial inclusion, by which, of course, we mean access to and availability of financial products and services, making sure that the right infrastructure is in place, whether that's physical or digital, and tackling barriers to access to financial products and services. But that alone, access, giving people access alone, we don't think is sufficient. We also think that part of the picture needs to be appropriate financial consumer protection settings, by which I mean the laws, regulations, guidelines that are in place in countries to ensure that consumers are appropriately protected in their dealings with financial products and services, and they get fair treatment ultimately, and have avenues for redress if something's to go wrong. And another important part of the picture is also financial literacy, the idea that consumers should have access to the information that they need to make informed choices and decisions about their personal finances. So we see these three policy agendas working complementary to one another, all in support of improved financial resilience and financial well-being. And of course, the theme of financial resilience is one that has been very prominent in the analysis of the impact of the pandemic and the looking forward to what next. Next slide, please. So, as I said, we have, over the course of this year, we've been conducting a piece of work to look at the impact of the pandemic on financial consumers and to consider the policy responses that have been put in place and understand from those what are the lessons that people have learned and what are the most effective approaches. So the report actually is based on a questionnaire, a data collection exercise that we conducted earlier in the year. And as you can see from this slide, we had really widespread participation in the questionnaire exercise from countries right around the world. So over 80 countries participated in the questionnaire, and of those 80 countries, 164 different organizations from within those 80 countries participated. And I think that goes to show, A, that there was a very strong desire on the part of countries to participate, to share information, to be part of this data collection and analysis, and as I say, ultimately sharing exercise, part of obviously this presentation today. What it did is it's give us a really good picture of the global response. And I have to say thank you, because no doubt there are people on this call, or people representing countries on this call, who participated in this questionnaire exercise. So thank you to those. And I want to also thank the members, the participants of the task force, including the IAS and the ICII, who helped us to disseminate the questionnaire through their membership networks to help us get this really comprehensive participation and therefore a robust data set and evidence basis on which to develop our report. So if we go to the next slide, I'm now going to look at to briefly cover the impact of the COVID-19 pandemic on financial consumers based on the responses that we received, particularly focusing on the risks identified to consumers and digitalization. So next slide, please. So on this slide, you can see the results from the questionnaire in terms of the risks, the top risks that were faced by financial consumers as a result of the impact of the pandemic. So the overall risk that people were most concerned about was reduced financial resilience of consumers due to reduction in income or business opportunities, and then followed by vulnerability to online scams and frauds. Interestingly, the ranking is different, though, between high-income countries and low middle-income countries. For high-income countries, actually the number one ranking, or the number one risk, was exposure to scams and frauds, whereas respondents from lower middle-income jurisdictions ranked reduced financial resilience as the most significant risk. And in addition, the risk of increased financial exclusion due to lack of access to financial products was of much greater concern to respondents from low and middle income jurisdictions compared to those from high income jurisdictions. If we go to the next slide, please. This focuses on one of the most significant impacts from the pandemic, or the experience of the pandemic, which has of course been the much accelerated trend towards digitalization of the financial services sector, which is of course a trend that it predates the pandemic, but I think we've seen it's been effectively turbocharged by the response to COVID-19 related restrictions. So many jurisdictions observed the entry of new digital financial products and services in response to the COVID-19 pandemic. 44% of respondents told us they were aware of new or innovative digital products or services developed specifically in response to the pandemic, while others, of course, witnessed the rapid uptake of existing digital financial products. So payment and transaction products, digital wallets, QR codes, contactless cards, mobile trading apps and platforms have all been significantly accelerated in their use and uptake by consumers. And against that, we've also seen a decline in the use of cash, ATM transactions and bank branches. Many payment providers were allowed or required to expand the use of contactless channels and increase limits on contactless payments. So I think 3/4 of the respondents to our questionnaire told us that the limits on contactless payments had increased in their jurisdiction, and these increases range from 50% to 200% of the original limit. So all of this shows how important digitalization has been in mitigating the effect of the pandemic on financial consumers in terms of their use and access to financial services, but also, of course, raises the issue of the risk of financial exclusion for those who lack the digital financial literacy or the digital capability they need, but also those who lack basic access to services, digital access, connectivity, and so on. So if we go to the next slide, I'm going to now just briefly focus on some of the measures, the policy measures that have been put in place to support financial inclusion and protect financial consumers. And if we move to the next slide, you can see that from here, more than half of respondents to the questionnaire told us they had adopted measures or put measures in place to support financial inclusion. The most common of those being to promote the use of digital financial products and services. And so this manifested itself in things like waiving or capping transaction and transfer fees, increasing limits for contactless payments, as I already mentioned, encouraging digital onboarding, e-signatures, digital communications, and so on. We also saw many jurisdictions expand the use of digital channels for government payments, both to and from individuals. So payment of things like taxes, permits, fees, but also disbursement of pensions, benefits, and salaries, public sector salaries. And this was more likely to happen among low and middle income jurisdictions compared to high income jurisdictions, which may reflect the infrastructure that was already in place before the pandemic. In order to ensure continued access to financial services during lockdown periods, we saw that more than 1 in 10 respondents reported to us that their jurisdiction had classified financial services as an essential service, which meant there were specific requirements or guidelines about keeping financial institutions open, particularly, for example, bank branches. If we go to the next slide, looking at measures to protect financial consumers, financial consumer protection policy measures, the most common measure that was put in place across jurisdictions around the world related to new or enhanced arrangements for consumers experiencing financial difficulty or financial hardship, so that they could take advantage of temporary relief measures to alleviate their financial burden while, for example, they might be on furlough or on reduced levels of income, or even sort of having lost employment or business opportunities as a result of the COVID-19 response. And you can see from this slide, we also asked jurisdictions to tell us if the measures were temporary or going to be temporary in nature, and or whether the measures might also move into structural or long-term policy changes. And we've seen this quite a lot, and I think there's still some way to go, actually, in terms of measures that were put in place in the face of the crisis as perhaps temporary measures have actually informed in terms of as both the pandemic has gone on, but also looking at what has worked well or what measures might actually benefit from being made longer term in terms of their application to consumer protection frameworks. And on the next slide, just to focus on insurance more particularly, we can see that the most frequent way that jurisdictions supported consumers of insurance was through enhanced disclosure and providing extra information to policyholders. And this was a change that in many cases has been made permanent. Other measures put in place included discounts on or refunds of premiums, deferred premium payment arrangements, suspending cancellations of insurance contracts, automatic renewals, and so on. And in many cases, one thing that we saw, the second most common measure, was a focus on ensuring simplified and accelerated claims handling arrangements to settle claims arising from COVID-19. And we saw that happen in a lot of jurisdictions as a result of both industry and regulatory intervention. If we go to the next slide, which shows of the various measures, how long the measures were intended to last for and whether they would be made permanent. And as I said, you can see here that enhancements to disclosure requirements and or the provision of extra information to policyholders has been the measure most likely to have been made permanent in jurisdictions around the world. The next slide provides some information about complaints, consumer complaints received by public authorities. Perhaps not surprisingly, the number one area of complaint related to the handling of claims, including denial of claims, and I think that's quite common with insurance complaints generally from consumers. One of the things that has come out of this analysis is that it was clear that in some cases, the reason consumers were complaining or having trouble, shall we say, was to do with the communication around relief measures that were put in place. So where perhaps it wasn't clear for consumers exactly what they needed to do or how to access a relief measure. So for example, whether that was to apply for a waiver or an ex gratia payment or an extended time of cover, where the communication wasn't really clear, of course, this then led to some consumers complaining about that situation. And I think that really emphasizes the role of, or the importance of having really crystal clear communications for consumers about how they can access and use relief measures, obviously in this case in the context of a pandemic, but of course you could extrapolate that beyond the pandemic and think about making sure that channels and access channels are really, really clear and steps made really, really clear for consumers so that they can actually access the channels that are available to them. If we go to the next slide, perhaps just to wrap up, I'm going to just pull out some of the summary of the lessons that have been learned and the effective approaches that are set out in the report, which, as I say, we'll be publishing very soon. The next slide just briefly covers our summary of the implications of the pandemic for financial consumer protection and financial inclusion. I won't dwell on these because they essentially summarize some of the points that I was just making before. But if we go to the next slide, here we have distilled from the data collection, the analysis and the work that we've been doing all of this year, and actually since the beginning of the pandemic, some of the effective approaches that we put forward in the report arising from, as I say, the measures put in place. So things related to the need for quick and flexible hardship arrangements to be embedded into frameworks going forward, so that they're in place rather than having to be put in place reactively. Obviously harnessing digitalization, the importance of business continuity plans. We saw that measures seemed to work best where there was good coordination among stakeholders. We saw that in many cases, government, regulators and industry working together to put in place measures and to make sure they were working effectively. The importance of having accessible complaints channels is important. If we go to the next slide, addressing online financial scams and frauds. Now, obviously, this is a challenge, I think, in many jurisdictions. And again, what we saw, though, that where a multi-pronged approach was taken, this was likely to be more effective. Embedding financial inclusion and financial consumer protection in innovation strategies, enhanced monitoring by use of multiple sources of data. As I said, clear communication for consumers and leveraging digital IDs in terms of customer due diligence requirements. And if we can go to the next slide, please, which is my last slide, just to sort of give you an idea of some of the next steps from this work. So as I said, this report will be published hopefully this week, and we'll very happily share it with everyone, with Pascal to share with the group, and of course all those jurisdictions that contributed to the data collection exercise. This report has informed the menu of options that G20 has endorsed this year on options for enhancing digital financial inclusion. We'll also be producing a more detailed report with a lot more data analysis that I can also share when that's available. And finally, just to mention that this work will feed into the review and update of the G20 OECD high-level principles on financial consumer protection that we're currently undertaking, which is a really important opportunity to review the foundational policy settings and I think an opportunity to reflect the lessons from COVID-19 in that. So if we go to the next slide, which is just to say thank you very much for your time. I think I might have gone slightly over. Sorry, Pascal. Happy to take any questions in the discussion, of course.
No worries, and thank you, Miles, for this presentation. I think it's given us a good taste of what to expect from this G20 OECD report, and I look forward to reading it as well. Just a reminder to our participants, as Miles has just said, you can ask him questions about this report or just generally about his feedback as well. We will be taking questions at the end, and please include them in the Q&A box as well. But for now, this presentation has been a good introduction to our panel discussion. And I'd now like to invite the remainder of our panelists to join us so that we can start our discussion. And perhaps I can start with our insurance supervisors in particular, and with you, Thomas. What lessons has ICII learned in response to the pandemic, and what has the impact more generally been on financial inclusion in Costa Rica?
Thank you, Pascal, and thank you for the invitation. I think this conversation will be so interesting, and congratulations, Miles, for this great setting in the scene. It's you will give us for us will be very easier to share our thoughts about the team. Let me switch to Spanish, so in order to be more clear with my ideas. En efecto, Pascal.
Yes, so Pascal, some of the lessons from a supervision area, specifically from Costa Rica, the experience of COVID-19 has left the world astonished. And there is a gap protection in the markets, especially in underdeveloped countries, in emerging countries, where the levels of growth in insurance are very important, but the penetration is still pretty reduced. In places like Costa Rica, one of the first lessons that we have learned has been digitalization. We started this process about 13 years ago. And so therefore, it was really an easy transition. We were able to be resilient, and we were able to provide a quick response. However, it did test, and this was, and we were able to provide services to the public appropriately. Perhaps a second lesson would be that we had a lack of knowledge of those that were insured and the knowledge of the products. And so therefore, we have a need to establish products that are more simple and clear to understand, and perhaps to develop some necessary covertures, especially for small and medium-sized businesses that were able to withstand the lockdown of the economy without any type of protection. In third place, digitalization, which was quickly adapted to the insurance market. And so I think we're going to develop this conversation a little bit more. But yes, we had great opportunities to close the protection gap. And so within this context, the consumer protection and the role of supervision to be able to facilitate inclusion and market sustainability is extremely important. Alongside, as Miles was saying, we need to increase in consumer protection. We need to improve the understanding of our insurance products and financial education at a global level. Of course, this has provided very tangible benefits, that we have to have collaboration. As the president of the Financial Inclusion Forum of IAIS, I'm very pleased to say that the forum has been a space and an additional platform of information exchange, especially between countries that are emerging.
This
forum has allowed this information exchange and exchange of practices so that the regulator can also supply the norms according to the development of their markets. The members of FIFE said that COVID-19 was extremely important to assess in regards to financial inclusion. And so this exchange has provided us some general ideas. It is not surprising to consider that early on in the pandemic, there were many risks and opportunities.
Misma situación y empuja entonces a generar estos espacios de...
And so therefore, we were able to find spaces for the regulator to make changes within their country and to accompany public policy for financial inclusion. This has allowed the members of FIF to exchange the best practices that are being developed in their countries. And so in this perspective, we did a survey, and this survey was answered by the FIF members. And so this has allowed us to have a deeper dialogue so that we can assess and identify lessons of digitalization so that it supports financial inclusion post-COVID-19. Of course, this will be an amazing tool. One of the preliminary lessons of our talks we are going to be able to share today, but for now,
como hemos conversado con Manuela, estaría dejándole algunos de los detalles a Manuela para que ella también los
I'm going to provide some details to Manuela so that she can also share them in a couple of moments with you. Thank you so much, Pascal. Over to you.
Thank you, Thomas. And we look forward to hearing those observations from the FIF as well. And we'll be discussing digitalization in a bit more detail later on during this panel discussion. But if I could turn to you now, Manuela, the insurance sector has generally proven to be resilient during this crisis, but as Miles mentioned earlier, consumers have proven to not be as resilient during this time. Are insurance supervisors subsequently shifting their focus onto the resilience of policyholders as a result?
Thank you so much, Pascal. And first of all, really, I would like to thank the organizers of the panel and the conference. So the Access to Insurance Initiative and also the Munich Re Foundation. It's a great pleasure to be here at this panel. And I would also like to thank Miles and Thomas, who have prepared really the ground also for my intervention. So the report from the OECD is an excellent document, summarizing many trends that we have also come across. And Thomas was pointing out the importance of the Financial Inclusion Forum that we have established together between the IIS and the Access to Insurance Initiative. So yes, Pascal, the sector has proven resilient, and yeah, are we now shifting our focus to the resilience of policyholders? So that's a very good question, and indeed, so far the insurance sector globally has proven to be resilient, in particular also during last year, where we had major volatility also in the asset market, and we have published a global insurance market report last year, and that also broadly came to the same conclusion. Protection of policyholders is at the core of the IIS's mission. So our mission is to promote effective and globally consistent supervision in the insurance industry in order to develop and maintain fair, safe, and stable insurance market for the benefit and protection of policyholders, and to contribute to global financial stability. So it's all interlinked. Yeah. So we need stable markets. We need also fair, safe, and stable markets. But we also need a fair treatment of consumers and customers and policyholders. And since the pandemic kicked off now for nearly 2 years ago, which is quite a long time, I must admit. The IIS has been actively monitoring the impact on the sector through multiple work streams. So we have set up a COVID dashboard, which is more quantitatively, and where we have also monitored certain quantitative indicators. But we also have set up a database on supervisory responses to COVID-19 and measures that were taken by regulators and supervisors around the world. And this is also where Miles has asked the questions, which of these measures may be more mid and long term? And we can see certain trends when, for example, I think about digital signature or digital IT, submission of electronic reporting. Those most probably will be trends that will accompany us also in the new normal. And not to forget the ICII, the Access to Insurance Initiative, also our key implementation partner and capacity building partner, established a tracker on measures taken by regulators and supervisors, in particular for emerging markets and developing economies, which is on their webpage. And it's really very valuable to see what has been done, and it's really enormous. All the measures that have been taken to ensure such stable markets, and then also to enable the resilience for policyholder and policyholder protection in general. Supervisory action has focused from the beginning on the resiliency of policyholders. For example, when we started about operational resilience, also operational relief, measures were in particular targeted to the benefit of policyholders. So I just would like to also flesh out some of them. Miles had them also in the report. So it's mainly a combination of operational relief and economic relief. We learned about premium holidays. So that means insurers that definitely delayed the premium payment, for example, for a certain period, but also to install premium payment plans for those that were faced with financial difficulties. So it was not an automatic cancellation of the insurance cover. No, the insurer together tried to find a solution with the policyholder. Or there were also some prohibitions of the termination of insurance contracts, for example. Those were also measures that were taken by supervisors in certain markets. On the other hand, we could see extended coverage. So either from a timing perspective, so that the cover that would have run out was extended by another 6 months, another 9 months, for example, but also the scope of coverage, what we could see. For example, COVID tests were included, or also some treatment, for example, for hospital personnel that we have seen in the US in particular, that was also on a voluntary basis coverage provided for healthcare workers. Then there were also measures taken, which I wanted to refer to, that from supervisors, for example, to deny more or less, to prevent the denial of claims due to lockdown, for example. Of course, these are measures that can be looked at from both perspectives. What is clear from all these measures is that the e-signature was definitely very much promoted, or electronic filing of documents, be it claims documents, be it reporting obligations that were due from the firms. But also here, supervisors allowed, for example, a delay in reporting obligations, or they also postponed certain consultation activities, or some jurisdictions even postponed some regulations they wanted to implement due to the pandemic. So supervisors have been conscious of the financial difficulties caused by the pandemic. And the Financial Inclusion Forum, where Thomas also said that this is a fantastic platform for a dialogue amongst supervisors in emerging and developing markets, they also have outlined some of the measures they had to take to ensure the sector and firms were treating their customers fairly during this challenging time. And we have several examples, and one example is a market in Asia, where a life insurance product was launched digitally and also distributed via a digital channel, and that is accompanied by a monitoring from the supervisor to see how customers are treated and whether they are treated fairly. So there will be an evaluation of the distribution of these products now, in the next couple of months. So these accompanying measures are also implemented. Then in the Financial Inclusion Forum, we have also learned with the exchange amongst supervisors about new initiatives that were targeted in particular to the underinsured and to the underrepresented groups. The pandemic also highlighted protection gap that exists, that of course also laid open these vulnerabilities. And now supervisors are also exploring different tools and mechanisms within their remit to address these protection gaps. The initiatives really range from a kind of a holistic analysis of insurance coverage in the market that is available for underserved communities, in particular, to the establishment of an internal committee, in particular focusing on inclusion and identifying practices that disadvantage underrepresented groups. So those are only two examples. So one is more, okay, which insurance coverage is provided to the underserved communities? And the other one is more, okay, are there some practices that would disadvantage underrepresented groups? Other examples that were mentioned in the exchange of the Financial Inclusion Forum were collaboration with governments to launch subsidy programs to encourage the purchase of microinsurance products, or the promotion of microinsurance companies, for example. Others reported about a pilot program that was targeting households to adopt insurance, in particular triggered by the protection gap and the awareness that was created also by COVID-19. And last but not least, just to mention another example about amending legislation and regulatory arrangement to facilitate access to insurance. So in conclusion to this really very good question, supervisors are not now shifting their focus on consumer protection. This is an ongoing process, and consumer protection is also at the core of their supervisory activities. But the pandemic has opened new opportunities. For example, thinking of the accelerated digitalization trend in the insurance sector, which is going along the entire value chain. And here, supervisors definitely need to keep a close eye on these developments to ensure that consumers are treated fairly also in the new normal?
Thanks, Manuela. And I think what has been quite distinct during this crisis is actually just how proactive and innovative supervisors have been actually in providing support to policyholders and consumers actually. Nylofa, now that we've heard from the supervisory side, how has industry adapted during this time and what have been the main lessons learned from your side?
Thank you so much, Pascal. Hello, everyone. I'm sure you all are having a great day at the conference. I think every year this conference is graduating to the next level. Year on year, there are changes. And as Dirk mentioned in his introduction, that the biggest example of that is that we are catering to people from two completely different end of countries. So this is how it is progressing. So I would like to thank you, ICII, for providing me this opportunity. With you, I would also like to thank the Microinsurance Network and the Munich Re Foundation for inviting me. I know it was a last minute invitation, but I also realized that I had to manage myself, but you guys had to manage so many people around you, and you had to manage all the responsibilities around you, and you did it fairly well. So thank you for that. But one thing, while I was thinking this, I was also thinking that how was this shift possible? This shift was only possible because we are having a virtual event. Prior to COVID, if we move 2 years down the road, if this event was not virtual, this shift would not have been possible. So look, this is how we have evolved post-pandemic, and this is how we have changed. So moving on now to my slides and to your question, I think it's a very nice question. We have learned a lot of lessons, but before learning those lessons, what we can't miss is that we know this graph actually shows you that we have people from innovators to laggards, and insurer readiness even pre-COVID was not as promising as other industries. I think it will not be fair if we don't acknowledge that. I think the entire last day we were discussing that still the reach of the insurance sector is limited. We cater to the problem of financial inclusion. We have a lot to do when it comes to insurance inclusion. So, and not specific to any country. I think if we talk about all the 700 plus countries who were surveyed due to by Munich Re and by Microinsurance Network, I think similar kinds of results were shown. So when it comes to readiness to digital, I think that the consumers' expectations are moving very, very fast. And we have a wide gap. We already had a wide gap pre-COVID crisis, but that is all the more increasing. So we have to change very quickly. We have to become agile. Now coming on to the lessons that COVID has taught us. Pascal, can you move to the next slide, please? So I think these terms are nothing that nobody of us doesn't know. I think everyone is very, very familiar to these terms. But if we talk in every term in a little detail, one thing, I think one theme that is very common is the need of the customer. We have to adopt to the need of the customers. So the pandemic has taught us that it is very important and more important than ever before. So I'll talk about Pakistan here because I am, of course, representing Pakistan and my company EFU Life. So when COVID came, I still remember we all thought that what should we do and what should be our strategy as a company and as a country. So we had a couple of discussions with our regulators and the other insurance players as well. And we brought some COVID related initiatives. So we designed some products that were specifically COVID related. There was a very good uptake in the market for those products. But what we also saw was that the people were then also looking at their existing products that they had in their portfolio. So they were thinking that why to bring a new product? Why can't we make changes to our existing products that helps our customers, that serve the needs of our customers? So we can include COVID in all those products. We can bring some COVID related riders in those products. We can increase the life and health protection needs for the customers. So this is all that was happening in Pakistan during the lockdown times and during COVID times. Then what we also realized that it's a process of constant improvement. So the delivery is very, very important. We can bring the best product that we have, but if it is not as per the needs of the customers, if the processes are not aligned in the way that they perfectly fit the needs of the customers, then the best products would fail. So we have to understand that what our customers are wanting to, and if we are, say, for example, partnering with an organization. So if we are partnering with a bank, with a microfinance institution, with telcos, so we need to understand the mindset of their customers. So we can't expect them to change as per insurance processes because they are not built that way. They are very good in delivering the telecom services, the banking services, and they will always be that way. But we as insurers have to keep those elements in mind on how can we be inclusive, and we be inclusive in bringing customers into the insurance net and tweaking our processes according to their processes. And this is really not the one-time process. This has to be done in continuation every time. Then change, as I already mentioned, that change is very, very important, and COVID taught us that this can happen any day. So one day you could be at home and a week after you could be in the state of lockdown. What we have to do, I think we as an industry, if we talk about Pakistan, we still rely a lot on brick and mortar channels. So we have partnerships with banks and we have our agents on ground, but all of them need facial talks, need a paper-based process. They need to talk to the customer in detail, go through the sales process, but everything completely changed. And one day we realized we couldn't do that anymore. So I think they were for the first time downloading Zoom at that time. And see, now we are so familiar with this engine, but they had to do that. They had to use WhatsApp, they had to use social media, they had to make calls. So change is very important. We have to evolve. Innovation, new ways of doing business. So old ways will not be prominent anymore and will not be relevant anymore. So we have to adopt to these new ways of doing business, and it's not bad. Even like if we adopt these new ways, every one of us realize that it has brought efficiencies in the processes and it has done some cost saving for us as well. So why not continue it for the long term? Digitization, no one can disagree that this was already changing. But with COVID, I think it's more important than ever before. Use of digital means. These digital means can be used to develop a new product. This can be used to make your process efficient. This can be used to make the customer more aware. This can be used to make the delivery channels more optimal. So digitization can be used everywhere. So this was also one of the lessons that we learned. We already knew we were using these channels, but everyone needs to question that, were we using this efficiently like we did after COVID? And problem solving. So if we can have a solution to such a big problem as COVID, so we have a solution to every problem. It's all about finding it within yourselves. So for me, these were the lessons that we learned from the pandemic. Thank you, Pascal.
Thanks, Nilofer. And if I can stick with you actually for now, because digitalization keeps recurring from all our speakers today. Has the Pakistan insurance sector adapted? And does this digitalization feel like a long-term trend or one that will potentially change once social distancing rules are relaxed?
Sure. Can you move to the next slide, please, Pascal?
Yeah.
So since this question was very relevant to Pakistan, I thought it will be important to give everyone and the audience a perspective of how does Pakistan looks like. And believe me, it's different from what it looks like on the media. So I would tell you that we are a population of 225 million people. We are the 5th most populous country in the world. Our rural population is 65%. And one thing which many of us don't know, that we are a young population. 60% population is less than 25 years old. We have a large band of people lying in the low income population. 178 million people are there. Middle income is 4.5 million and rest of the population is 41 million. And the middle income group has shrunk a lot during this COVID times. This is not a stats that is uncommon anywhere else, and it also prevails for Pakistan, that middle income has shrunk and a lot of people from middle income have moved to low income segment. We are financially excluded, so there is a lot to be done. The formally served people are 23%, and through informal means 24% are served. We have around 62 million bank accounts and 75 million mobile banking accounts. Another worrying stat, our insurance penetration is less than 1%. It's actually 0.8%. And when you compare it to our other countries, just the neighbor right there, India, its insurance penetration is 4.4, 4.5%. So way ahead of us. There is a lot of things that are happening, and I'll discuss that in my next slide. One, but in fact, two encouraging stats is that our mobile subscriptions has one slide prior, Pascal. Thank you. Last slide, please. After that. So our mobile subscription is 186 million. 83% of our population uses a mobile. And internet penetration is also increasing at a very fast pace. So 47% of the population uses internet. 105 million subscribers of internet we have. Next slide, please. So these are the enablers that I feel are for inclusive insurance in Pakistan. So we now have a universal health scheme, which is covering 7.8 families, 97% satisfaction rate. Why is this important to everyone? This is important because this is now creating a positive image of insurance in Pakistan. People are becoming more aware. They are getting satisfied. They are seeing the needs of insurance. They are now aware on how we can claim insurance benefits. So insurance as a concept was never this clear before, but it is reaching there to the masses now. Then there is a surge of fintechs and insurtechs. So 40 plus prominent fintechs and insurtechs are there in Pakistan, and I'm sure as we speak they grow. So they work around the payments, and their role is distribution of insurance. So they are playing important role in two key aspects of insurance. One, distribution, which is definitely a challenge, reach to these 225 million population, and then payment. Payment for insurance, again, a big challenge. So many different and interesting means of payments have also emerged in COVID times, like mobile money, using airtime as your currency, digital wallets. So many happenings have evolved, and all of these, I think, are enabling insurance to come to the next level. Then if we talk about insurance penetration through telcos. So as a country, we have around 20 million insurance users, but these startups and through collaboration with telcos, they are now reaching 5 million clients, active clients insured. So this is how fast this technology is traveling. So 20 million as a country and 5 million specifically through the segment. Mobile penetration, as we spoke in the last slide, 83%, and 45% 3G, 4G users. So all this is also enabling. Then one thing, as my panelists have already mentioned, and they have very nicely defined it, the supervisors, the regulators are being very supportive. Both the regulators in Pakistan, I must say, our own regulator, that is the insurance regulator, and the banking regulator. So more so in COVID times, now they are talking more on market development. And this is really pleasing to note because they want financial inclusion to increase more than we want. And they are trying, they are enabling, they are helping. Like if I give you the example of COVID, our insurance regulator supported all digital payment modes. It supported all electronic mediums for customer communication. So they said less and less paper involved. You should use social media, you should use SMS, you should use email, and even WhatsApp to communicate to the details to the customer. And they told us lesser and lesser requirements. Is that believable? A regulator telling you that lesser requirements, but as I think Manila explained it very nicely, that it is very important to create a balance, that customer protection is a key. So protecting those customers, how can we take lesser requirements and still achieve our goal? To the next slide. So now digitization in insurance industry. So in my opinion, I think it is here to stay. And I think there is no way we can look back. Why? Because we now have digital natives. The population is now more digital savvy than it was before. They want to take their mobile in hand for everything. They want to do that. They want an excellent customer experience. So now if we take an example of banking sector, no one wants to go to the branch to pay, say, a utility bill or for their basic services. What they want is to open the internet banking and use it for all its requirements. So they want to go digital. Customers are there and they expect an excellent customer service. So they expect that when they go digital, their problems would be solved. Otherwise, they would then be dissatisfied. They prefer digital banks and e-commerce platforms. So prior, I know every one of us, without visiting the outlet, without touching the cloth or the material in our hand, we would not be satisfied buying it. But, and especially I'm talking in countries like Pakistan and the second, third tier, that we were like that. But now, yes, we want to deliver online. We want services to be ordered, and we now trust them more. And they want to engage with brands. So they want to connect. They want to less and less connect with people, but they want to use services that are easily available on internet, on mobiles, and they want to use it. So all of this, I think, is here to stay. And it should stay because this has taught us many new lessons. So why not incorporate it in the future as well? Thank you, Pascal.
Thank you, Nilofer. And maybe actually now I can bring in Miles, because along this discussion of digitalization, there's often been accompanied with this discussion about how consumers are shifting increasingly online. But are consumers really that different now than they were before the pandemic? And if so, what impact does that have on financial inclusion?
I mean, I think that's a really good question. And I suspect, you know, in many ways, consumers are as they always have been, the people who are buying financial products and services or would like to have access to them, but don't necessarily know an awful lot about products in detail, certainly. I think the main difference is, of course, the numbers of people who have had to embrace digitalization, whether it's what they wanted to do or not. I mean, just simply as a matter of fact, in order to transact, and not just in relation to financial services, but many essential services, even people who before the pandemic would have preferred to do that in person, have had to migrate to digitalization or digital channels for doing that. And I think that's been both a really good thing and also come with some risks. So I think perhaps for people who before maybe were just a little hesitant about digitalization or didn't feel confident, have probably found, oh, well, actually, this is easy to do. I can maintain contact, I can do what I need to do digitally. I think it's probably also prompted providers to think about how to make that journey or that interaction with their customers as easy as possible. So there's sort of like a sort of a dual upside there. I think, though, There are consumers, and we need to be mindful, there are consumers who, even with the best one in the world, they either don't want to or they can't use digital channels. They don't have the levels of digital capability, or it's not their consumer preference. And so I think we need to think, or financial institutions, insurers, banks, and so on, need to think about, well, how do we keep the access channels open, or how do we make our services accessible to those consumers? Because, I don't particularly want to stereotype, but I think there is clear evidence that shows that among older consumers, they are less likely to want to transact digitally. They are, of course, a very significant cohort of customers of financial services institutions. So we need to be mindful of their needs and access preferences. I think the other thing, perhaps at the other end of the age cohort to bear in mind, is that, of course, and Nilofer mentioned digital natives, and we know that for most young people right around the world, digital is not something strange or different. It's how they communicate, it's how they transact in all walks of life. But the fact that they may be very digitally capable doesn't actually make them automatically financially literate. So the fact that they can access digital channels and engage with financial services providers that way doesn't actually give them some special knowledge about financial products and services themselves, which they're still interacting with and still making decisions and choices about. So I think that underlines both in terms of those, well, I guess in all cases, so consumers who may still be excluded or at risk of exclusion, the importance of making sure that there are appropriate access channels in place for them. For consumers who are quite comfortable and brought onto digitalization and are, that's perfectly acceptable to them way of transacting, I think we need to still constantly use innovation about how to make those products and services as easy and accessible as possible. And I think that, particularly thinking about younger consumers, we need to think about financial literacy efforts to match, so that their financial knowledge is matched by their digital capability. So I think all of these things are relevant to how we might think about consumers post-pandemic in terms of financial products and services. Thank you.
Thanks, Miles. Thomas, maybe actually I can bring you in to kind of draw on some of the lessons that the Financial Inclusion Forum gathered during their stakeholder dialogue on digitalization. Is it now a growing consensus that digitalization is the key factor in improving financial inclusion?
Gracias, Pascal. Tremenda pregunta.
Thank you, Pascal. That's a great question. I see that there's a clear tendency towards digitalization, and it is a tool that is extremely powerful. However, a consensus, we need to think of a balance. How much is the market growing, and how much aggregate value do those products provide to the client? So we have to have that balance. For example, in Costa Rica, financial inclusion has come in through the banking side, and it has been enabled through a national system of payments of the central bank. Just to provide you with some data that speaks a lot, in 2019, there were 6,000 transactions. I'm sorry, 6 million transactions via cell phones. And by the end of the month of September of this year, we had 137 million. So we went from 6 to 137 million. And the increase of the amounts that were transferred has been 1,914%. So it's quite impressive to see how the entire financial system has evolved. It's to self-service. So that provides space so that we can provide other services. I was speaking to some insurance intermediaries in insurance. What we have found is that there is a fear regarding digitalization. Once the pandemic ends, are we going to go back? I think that is a question, a clear question. As someone just said previously, in Pakistan, I really loved her presentation because she was focused on the consumer. Because it's not about the market growing, but we want to generate that complete cycle of life of the product, where the product should be provided in such a way that it has an aggregate value to the client, that is finding, maybe they can do everything easier through their cell phone, but it has to complete the cycle. We were speaking in Costa Rica. There's a TV program that perhaps many of you will remember. My children didn't remember it, but it's the difference between, being in the Flintstone era and the Jetsons, the supersonic era. So there was a lot going on in that technological advance. It was a Jetsons advance in terms of subscription, but when you had to pay claims, we were still in the Flintstone era. So there were still a lot of barriers and it was quite complex. So we have to have simple, basic products to understand, but products that will really provide a solution. And that's where our efforts as supervisors have to come in, and we have to be very clear and effective. Without a doubt, with all the stakeholders in FIFE, we have found a broad consensus. This is going to have a double effect. It's going to facilitate financial consumption, but also we will achieve to target those people that do not have insurance. Swiss Red says the following: there are about 2 billion people in the world that do not have proper coverage or do not have any coverage at all. 2 billion. So we need efforts to be able to provide resilience after a catastrophe for a business or for a family. So yes, there are opportunities and they are enormous in digitalization. We need to provide more efficiency, reduce cost. We need to improve internal processes. That's where the Flintstones have to update. We need to provide effective responses to the consumers. So all of this combined, we need to balance all of these risks for the consumer. For example, they need fair treatment, the protection of their data, as we were just saying. So there are many elements involved. In financial inclusion and digitalization, we need to provide better services for the consumer, better treatment. We want to exclude risks. Insurance needs to be customized. We don't want to exclude a specific population. On the other hand, we need to be able to reach these populations that do not have coverage.
La panacea, el tema de la digitalización per se tiene que ser acompañada.
Digitalization needs to be accompanied by a public policy. The insurance regulator does not do this, but the government it has to be comprehensive. We have to define whether there are going to be subsidies, so that it is accessible. Regulators have to make efforts to develop safety so that this can work. At a global level, this initiative in 2020, we've been doing this for 11, 12 years. We have implemented many regulations. One of them has been my country. Last year in Costa Rica, there are 22 countries that are drafting these norms. So regulators have to incorporate these norms. And of course, they have their responsibilities that are important, which is stability and the good functioning in the insurance market and the trust. And we have to incorporate all of these elements to their necessary markets. But the norm has to be flexible to allow these developments, taking into account risks that may come up. There are risks and there are also opportunities. And finally, we cannot forget a great population that does not have digital education. Not only do they lack financial education or insurance education, but they are excluded from digital access. So we have to be mindful of that. The elderly, for example, but also others that have been excluded from the digital world. And so we have to find a way so that they can also access open doors. Over to you, Pascal.
Thank you, Thomas. And just to pick up on your point on the digital divide, and also just to discuss, a lot of this panel discussion has focused on digitalization, but I think what would be quite interested to hear is what effective approaches are there for those consumers who struggle to transact digitally. Miles, can I bring you in here on this?
Yeah, sure. Thanks, Pascal. I mean, there's a number of ways to approach this, and I know that jurisdictions are around the world are looking at this as a matter of urgency in terms of upskilling people in terms of digital capability they need. And as I said before, in relation to a previous question, of course, this goes beyond financial services and sort of the need to be digitally capable to sort of operate in society generally is becoming, you know, more and more sort of a key life skill, if you like. What we've seen from the research and analysis that we've done is that there are lots of financial institutions working with governments to provide training courses for people in terms of how to use digital products and services to develop their digital skills in terms of, as I say, that the role of financial institutions. But there are, I mean, this is a key part of the education sort of system for both young people and for adults in many jurisdictions around the world. Courses being offered to help people sort of develop their digital capabilities so that they can be confident in engaging with digital products and services. I think, as I said, this is a place where there's a really important role for financial institutions to also work with government in sort of the delivery and rollout of these courses. I think it's important that we, in the financial services side, that we think about digital literacy as a sort of a complement or an adjunct to financial capability or financial literacy measures, because, as I say, the fact that someone is digitally capable doesn't necessarily give them some magical financial literacy abilities as well. So I think, you know, we need to look at these things holistically. I think we can also, though, there's an opportunity to be a bit smarter here as well. And I know that there is lots of innovation in this space. I mean, knowing that we have cohorts in the population who struggle with digital capability, I think there's still a role, though, for developing innovative digital financial products and services that are so easy to use that the person doesn't really need to become digitally capable to use them. Now, that ease of access and ease of use is all about the product design and the product delivery, products and services design and delivery. I think a simple example of that is in relation to ATMs and in the sort of the banking industry. Many elderly people with access issues struggle with ATMs, and it's not really that difficult to program an ATM so that it features large print or other ways to make it more accessible to people who are not going to be able to transact or use a sort of a typical ATM that your typical user might be quite comfortable with. Now, obviously, you can extrapolate that sort of thinking right across the use of an engagement with financial products and services, including insurance. So I think there's lots of initiatives underway, and no doubt lots more than can be done. And I know that in terms of regulators and supervisors, there are various initiatives in place designed to foster innovation and this kind of thinking. So whether that's in many countries, for example, we've seen the establishment of regulatory sandboxes or innovation hubs. We've seen regulators sponsor tech sprints designed to take a problem and challenge the industry or challenge innovators to come up with fintech solutions for how to do that. I don't see why part of that can't extend to making to the design of financial products so that they're as easy and seamless as possible for people to engage with and to use. So yeah, just a few thoughts there. Thanks.
Thanks, Miles. And I'm very conscious of time and that we are running over quite significantly. So I am going to give our participants a chance to ask questions for the panelists. At the moment, we have one question that's come in, and this is for Nilofer. Nilofer, do people who fall from middle class to lower class, e.g. in Pakistan, really become financially excluded if they were not before?
I think it's a great question by Peter, and thank you, Pascal, for repeating it. I think that's not the case in Pakistan because we were forever facing this issue of financial exclusion. So those people who have fallen from middle class to lower class already fell into the category of being financially excluded. And if they were already included, they fall in the segment of serving through non-reported means. So they were never on the numbers ever. So that's the case here in Pakistan. Thank you.
Thanks. And maybe I can go back to the panel discussion now, as we've answered that question. If more questions come in, I will come to the participants. But perhaps just bearing in mind the time, perhaps we can go back to the role maybe that regulation and also the industry is playing in fostering financial inclusion. So in particular, Nilofer, if we can come back to you, but be quite prompt in this situation. How can industry do more to foster financial inclusion?
Sure. Can you open my slide, please?
Yeah, sure.
Okay, moving on quickly, I think customer segmentation has become very, very important when we talk about insurance penetration and financial inclusion. So these are three ways now in which we categorize. One is demographic, second is socioeconomic, and third is digital readiness. So digital readiness has emerged really very soon. So demographic was always there according to the age. Socioeconomic, as we all know, lower, middle, upper, and below the poverty line, and these digital natives. So I think whatever we design should be keeping the customer segmentation in mind. Next slide. So this is a very important slide for me because it talks about how can we increase the insurance penetration and the recipe to foster financial inclusion. So we have to focus on partnerships. We can't go with inclusive insurance to those millions of customers because traditional brick and mortar model doesn't work here. We will not be able to reach them. And if we do, it will not be efficient. We will have to close down that means because the cost will be much more. So focus on partnership, partnering with those institutions which are already catering to a large number of customers. And then in the last question, it was a very interesting dialogue that what to do about the customers who are not completely digital. So Pakistan is a similar case. Even if people are relying on digital for various other services, when it comes to insurance, because of low awareness, because of no one here very common ways to buy insurance, it is a push product. So what we have done, that we now call it a phygital model. Digital that is accompanied by some person who helps the customer go through this paperless journey. So I think this is a very important model which has evolved and is evolving. Customer segmentation, I already explained in my previous slide, that is what is kept in mind. And then claims and policy servicing. I think numerous discussion has happened in this conference about claims. What we sell is claims actually. So we have to make that process easier. We have to acknowledge the clients. We have to go to families. We have to make claim testimonials. And when it comes to inclusive insurance, I have seen myself, it makes a difference. We pay one claim and for the first time, we have 10 people in that bank branch saying that which product was that? Please let me know, I also want to buy. So it's very, very important. So this is 4 simple ingredients, but my recipe for financial inclusion. Thank you, Pascal.
Thank you, Nilofer. And we've actually had another question in the chat box, in the Q&A for you, Nilofer. If you don't mind, if you could type the answer so that we can move on to the next question for the panelists.
Yeah, this is again a very interesting question by Mr. Wilson, that how do we take religious and cultural bias? So we used to face this very, very frequently prior, but now what we have is takaful. What is takaful? Takaful is Islamic insurance. So we have that. We, EFU Life, are doing a significant chunk of takaful, and that's helping us. So yes, you are absolutely right. Religious bias is there, and we are tackling it through takaful means.
We also have another question actually that have come in for our supervisors. So what can regulators do to make business interruption insurance more valuable, understandable and relevant for future pandemics? Perhaps Manuela, I can turn to you for this response, you and Thomas.
Okay, I think what I will respond very, very quickly. What was already addressed is to have really clear terms of the insurance policy. That is absolutely important, that they are clear, understandable, so that the people who are buying such a type of insurance know what is covered and what is not covered. So that would be my main point. And the other point is really we have seen what should I say? We have seen interventions in some markets where insurance policies that were not supposed to cover certain, for example, a lockdown that was triggered by governmental measures. Insurers had to pay for this. So I think you also need certainty on both sides. You need certainty on those who take out the insurance by the terms and conditions. But on the other hand, you also need certainty for the insurance companies, what they are supposed to pay and what they're not supposed to pay. So I think this is the balance that needs to be stricken.
Thank you, Manuela. And I am very conscious that we are running out of time. And I actually want to spend the time thanking our speakers today who have taken the time to join us. Thomas Soleil, Manuela Zweimler, Miles Larby, and Nilofer Sohal, especially Nilofer, who came in very much at the last minute. So special thanks to you in particular. What is becoming increasingly clear, both from our panelists and from our presentations today, is that the pandemic has undoubtedly set back previous financial inclusion gains, especially in low income and emerging markets. Digitalization, a recurring theme amongst our panelists today, is clearly here to stay, and the insurance sector needs to adapt. But also, while there are benefits for inclusive insurance, especially around efficiency and transparency and inclusion, there are risks that the sector needs to be aware of. Whether insurance is more inclusive in a post-pandemic world will really depend on whether the insurance sector capitalizes on this pandemic to demonstrate the benefits of insurance to the uninsured. The crisis has certainly demonstrated that there is an incredible potential for insurance for the low income in particular. If there are no further questions, I will therefore thank our panelists for speaking today. It's been a pleasure to have you on, and for your incredible input as well.
Well, Pascale, thank you so much for these really interesting panel. Yeah, digitalization is certainly one of the keywords in the post-pandemic world. But one question that struck me during the discussion, or just one comment, is whether the client is different after the pandemic. And I think we will take some time to understand how the client actually changed, if the client changed, if such an event made them understand that risk management is important and maybe made them more open to tools like insurance. So thanks to all of you for attending. I can invite you now for a virtual coffee. We added these virtual coffee break sessions so that we have space to talk a little bit informal. And then I see you at the next session in 30 minutes, which will discuss climate risk insurance and how to combine the different layers. So thank you very much and see you soon.
Thank you.
Thank you. Bye-bye.
Thank you. Muchas
Bye.
gracias.
Thank you.
Adiós.